Welcome to the deep dive. So a lot of you asked for this. We've got the January 2026 equity research on Tesla, and we're here to deconstruct what is, it's really a high-stakes corporate pivot.
It really is. And the core conflict, the thing this whole report is built around, is what they're calling the great decoupling.
The great decoupling.
Okay.
Break that down for us.
Well, you have this fundamental divergence. The traditional automotive business, deliveries are slowing down, margins are getting squeezed. That's all deteriorating.
Right.
But the stock's valuation, it's completely held up by this massive option value on their AI and robotics vision.
So 2026 isn't just another year on the calendar. It's totally binary. They either make this huge leap from hardware maker to an AI-driven robotics firm, or the whole thing could face a really harsh correction.
Exactly. And that pressure is made even more intense when you look at what the research calls the youth sentiment paradox.
Ah, yes. This was fascinating.
It's a real anomaly. Tesla is, one of the most held stocks among Gen Z and millennials. For them, it's a wealth creation vehicle.
It's part of their holy trinity of risk assets, right? Along with NVIDIA and crypto.
That's the one. They see any near-term miss, any bad quarter as just noise. They're holding on for dear life, as they say.
But and this is the key contradiction, that loyalty doesn't translate to them actually buying the cars.
Not anymore. They're buying the stock, not the product. Brand desirability among Gen Z it fell off a cliff. It went from 30% in 2021 down to just 5% in 2025.
And the rumors points to two main drivers for that, right?
Yeah, two big ones. First, the core product lineup is getting old. And second, and this is a big one, the increasing politicization of the CEO.
Okay, so that erosion in the core business explains why they have to pivot so aggressively. The car business is now basically just the funding mechanism for these huge AI bets.
It has to be. And to stabilize things while they make that pivot, they're leaning heavily on the energy segment.
The Megapack.
The Megapack battery storage system is on track for over $20 billion a year. It's become this really stable margin buffer for them.
And that buffer is what allows them to pour everything into the linchpin for 2026, which is the Cybercab.
The Cybercab. It's the whole thesis. A dedicated robotaxi. No steering wheel, no pedals, just designed for recurring revenue from ride-hailing.
But to build that, they need a totally new way of building things, the unboxed process.
Yes. And the theory here is, it's groundbreaking. Instead of a normal assembly line, you have parallel assembly.
Right.
The front, the rear, the sides, they're all built as complete finished modules.
And then they just snap together.
That's the idea. Snap together. They're targeting a 50% cost reduction and a 40% smaller factory footprint. It's unheard of.
Wait a minute, that sounds incredibly difficult. You're talking about micron-level precision to get massive components to align perfectly. The research seems to suggest that the ramp-up at Giga Texas in April isn't just a risk for production hell, it almost guarantees it.
Oh, it absolutely does. That ramp is going to be the biggest volatility catalyst of the year. It's a completely unproven system at scale.
And all this is happening while they're fighting wars on two other fronts.
That's right. First, you have the hardware war.
Tesla versus BYD.
And BYD is just crushing it on volume.
Yeah.
4.6 million cars in 2025 versus Tesla's, 1.65 million or so? And crucially, BYD's vertical integration is so good, their gross margins, around 20%, actually surpassed Tesla's.
Which fell to 16%. Ouch. Okay, so that's hardware. Then there's the software war.
Tesla versus Waymo. And this is key. Waymo already has L4 unsupervised commercial service running. It's real. They're winning the safety game today.
So Tesla's only advantage is a theoretical one on cost.
It is. Their vision-only system is targeting 81 cents a mile to operate. Waymo, with all its expensive LiDAR, is estimated to be over $1.30. So the whole game in 2026 is, can Tesla close the safety gap before Waymo can close the cost gap?
So with all that in mind, what does the research forecast for the stock?
It anticipates a really volatile J-curve. Expect weakness in the first half of the year, maybe testing that $350 to $380 range because of those production costs and delivery issues.
But if that April Cybercab ramp works...
If it works, you could see a breakout in the second half, maybe above 500.
Yeah.
But it all hinges on that one event.
And this all depends on investors just keeping the faith.
It has to. The stock's trading at a 200x PE ratio. There's zero tolerance for any operational miss.
Yeah.
Absolutely none.
So the final thought, the takeaway for you watching this all play out.
I think you have to view Tesla in 2026 as a venture capital bet that just happens to trade on the public market. The wager is simple. Can they industrialize AI before their car business completely erodes?
Yeah.
And the only date that matters for you to watch is April 2026.